time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold. So I'm going to do a Your Stock, Our Take on Neo Performance Materials Inc., symbol NEO on the TSX. Trades at around $9.32, $422 million market cap. Its yield or dividend is just over 4%. What does the company do? They manufacture advanced industrial materials, magnetic powders, and magnetic specialty chemicals, metals, and alloys. Neo supplies these products to the automotive, residential appliance, media storage industries. The company has manufacturing in 10 countries and one research facility in Singapore. Now, the stock is down 53% year to date. Why? Well, the Q3 results swung to an unexpected loss. Q3 revenues increased 22% to $146.6 million, but operating income was down 82.2% to $2.2 million, and they had an adjusted net loss of $1.9 million or 4 cents per share. Now, Neo has benefited from the lead lag impact in a rising pricing environment. It bought inventories at lower prices, then was able to sell them at higher prices. Prices have declined 30 to 40% from their peaks, and as a result, the company is now selling its higher priced inventory and at these prices, and Neo's EBITDA dropped substantially in this past quarter. So there's some news out from the company recently. On August 22nd, Hudson Resources and Neo announced that they have executed a binding agreement where Neo will acquire Hudson and an exploration license covering the Seraphtok carbonatite, say that 3 times fast, complex in southwest Greenland. The project hosts a mineral deposit that is enriched in neodymium and praseodymium, I think, something like that. 2 essential elements, essentially, for rare earth permanent magnets. Now, Neo is also pursuing plans to break ground on a greenfield rare earth permanent magnet manufacturing plant in Estonia that is intended to provide European manufacturers with permanent magnets needed for electric and hybrid vehicles, wind turbines, and energy-saving electric motors and pumps. So the Seraphtok project is a key element to Neo's magnets to mines vertically integrated strategy. So the recent announcements, they may be long-term positives for the business, but they make a fundamental shift to a vertically integrated business from just a manufacturer of rare earths to a producer with multiple plants in multiple geographies. This adds an element of risk in terms of execution and financing for these ambitious projects, which just wasn't there in the past. So our conclusion, at present, based on 2023 estimates, which factor in a normalization of pricing, the company trades at around 3.5 times EV to EBITDA, which is a discount to rare earth producers. Although, again, Neo has not graduated to being a producer. They're still just a manufacturer. They are looking to become a producer, but the producers trade at about 13 times. It's also it's below Neo's long-term historical average multiple of around 6. So it's just a little more than half. If one believes in the plan and is looking to hold for 2 to 5 years, perhaps it's an option in this space. But again, execution risk has increased significantly as the company has this ambitious plan to vertically integrate. The next quarter will likely face a similar pricing environment as we saw in the last quarter, which will look at, you'll see weaker profitability year over year. As such, we plan to just monitor the stock at present and are not looking to buy. But it is a company that we do monitor closely and see some potential value in over the long term. At these prices, though, we're not buying.
No, and there's a couple other companies that we're looking at in the rare earth space as well. Brett and I have been doing some research on a company called MP Materials. They're kind of taking the opposite direction. They're starting as a producer and then they're going into production. But really, I mean, when we look at the renewable energy trend, the electric vehicle trend, producer, and then they're going into processing,
the opposite,
and
basically.
Being a fully integrated rare earth company. But really, I mean, when we look at a lot of trends that are expected to transform society going forward, like renewable energy, electric vehicles. They all depend on rare earths. China essentially owns that market, and so we're seeing a lot of companies trying to diversify globally in order to be less dependent on China. And we're also seeing governments invest money in helping companies do that because it becomes a national security issue. And I think that COVID really highlighted that, right? I mean, when things shut down, when things get tough, countries start looking out for themselves. So if you're dependent on another country for critical imports, that's something that a lot of countries now are reassessing.
Yeah, it's certainly a sector we'd like to have participation in and are looking there, just looking to find value. And I mean, we do see significant volatility in these companies because often they're driven by the prices of these underlying rare earths, which have been very volatile. So you're going to have that as a natural part of the business. But if we could find a good company with a good balance sheet, which is important, that we think has good relative valuations on a normalized basis, it would be a sector that we are looking to participate in and may have a recommendation there over the next year.
We hope so.